time for Licking on Lending.
Welcome, everybody. Good to have you with us.
Welcome to Licking on Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. Now here's your host of Licking on Lending, David Lickin.
Let's begin.
Listeners, I'm excited to have a dear friend back on the podcast, Mitch Kider. He's well known to all of you out there, and there's something significant that has developed that Mitch reached out to us. He says, we need to share this with your listening audience. So listeners, we're honored to have Mitch give us some more insights. Mitch Kider, good to have you back, friend.
It's great to be back here, David. It's good to be here with you. Thank you.
Well, we don't need to introduce you. You're so well known in the industry. My favorite part is you're the only one to have sued CFPB and won. But there's been some new developments, and that's what we're here to talk about. So get us updated on the latest developments legally, especially as it relates to CFPB and fair lending and ECOA. What's the latest?
Absolutely. So I wanted to come on and talk to you about a case that many in the industry are talking about, and that's the Townstone Financial Case.
Yes.
And this is another case, a second case now in a suit against the CFPB that the CFPB has lost. This case,
encouraging in itself.
Oh, yeah. And you know, the CFPB doesn't necessarily learn. They like to test the limits of their authority. And this was a case in which they tested the limits of their authority as well. And the court rebuked them for that. It's a fair lending case, and it deals with redlining and the CFPB's theory under ECOA, the Equal Credit Opportunity Act, and how they can reach lenders and allege that they redlined because of statements they made or marketing or things along those particular lines. So let me give you a little background.
Yep, let's get the background.
It's a case that was brought by the CFPB in federal court in Chicago back in 2000. And it was against a small mortgage company in Chicago known as Townstone Financial. The Pacific Legal Foundation, which is a nonprofit conservative firm that brings suits against the government when they think it's necessary, were brought in by some private attorneys, and they did an excellent job with this particular case. In this case, the CFPB alleged that Townstone Financial violated ECOA based on comments that were made by the company on a local AM radio program the company was using for marketing purposes.
Okay.
So the CFPB alleged that the comments themselves were racially discriminatory and that the comments had the effect of discouraging minority applicants from applying for a mortgage loan with Townstone. Now, that may sound very familiar to many in your audience because the CFPB has been pursuing redlining claims.
They have been, yeah.
Especially against independent mortgage bankers, suggesting that their marketing or lack of marketing is discouraging minority applicants from applying for loans. And then they match it up to statistically how those lenders are doing in minority census tracts, and they allege redlining. So in this particular case, they allege that Townstone, as a result of the comments that were made on this radio program, was in fact discouraging minorities from making loan applications with them. It's really important because ECOA itself is an important statute, and ECOA bans the discrimination against an applicant in all loan contexts, against an applicant applying for a loan, a mortgage loan, other loans as well, not simply limited to mortgage. But the regulation that was issued under ECOA a long time ago by the Federal Reserve Board expanded that particular statute. And the regulation to the statute said that it doesn't just ban discrimination against an applicant, it bans discrimination against a potential applicant or potential applicants, plural, okay, by making statements that may discourage them for applying for credit itself. This lawsuit the enforcement action that was brought by the CFPB against Townstone was under that particular regulation. They said Townstone, because the company made these allegedly discriminatory comments on their radio program, and I'm not here to tell you that these were good comments, because
I read them in the memorandum of opinion and order that you sent over for me to read about this. I mean, there were some comments that I understand could be interpreted as inflammatory and things like that. But really interested, and there's a number of things as we deal with. I advise mortgage companies and banks, anyone in the mortgage industry, you defend them and give them advice as well. We know these things are said, and we are not saying that you should be careful about what is said, but there's some encouragement in this. If you have someone out there within your company saying things that you may not, as a business owner, stand behind, that it doesn't have to be fatal or terminal. I think that's where you're going in this. Is that correct?
Well, I'm not here to condone the statements that were made, quite frankly.
Yeah.
Where I'm going is, the rule of law is such that it does not apply. A law does not apply to a situation where the government cannot use that particular law, but otherwise thinks the conduct is bad. So just because the government thinks the conduct is bad doesn't necessarily mean that conduct violated the Equal Credit Opportunity Act. And that's the point. And that's an important concept. That is the rule of law. You can't just judge people and say, well, your conduct, in my opinion, was bad, and therefore I'm going to throw an enforcement action against you and allege that you violated a law, when that law does not say that. In this particular case, the CFPB did that because a regulation said you can't discourage prospective applicants. And so they brought the case under the regulation itself. Okay. But Townstone Financial filed a motion to dismiss. And what they pointed out in this motion to dismiss was that the first thing that you have to look at is the statute. You have to look at what Congress said. Congress makes the law. Regulators don't make the law. Regulators implement the law, but Congress makes the law because they are your elected officials. And what the motion to dismiss pointed out to the court was that the law says you cannot discriminate against an applicant in a credit transaction. It doesn't say anything about potential applicants. And it especially doesn't say anything about potential applicants that are completely unknown to you, that may be listening to a radio program that the general public is susceptible to. Does it mean that a potential applicant is the general public? Absolutely not. So what the motion to dismiss said was, listen, the regulation went too far. They, in fact, are saying something that the statute doesn't say. It's not within the authority of the statute itself.
Interesting.
And then the CFPB, for the first time, took that one step further and actually sought an enforcement action. And so they said, hey, you said bad things. You said terrible things. And I believe that it's an ECOA violation. And
which in fact, they did say some things that were, many of us would say, unacceptable. But what you're saying is it was not a violation. What the courts came back and ruled on is it's not necessarily a violation of ECOA, correct?
Well, exactly right. And it's an important case. It's an important case from an administrative law perspective. And that's why I thought we ought to talk about this case.
I think that's really good. And by the way, Mark Helm has joined in on the interview. Mark, good to have you joining in here.
I apologize, gentlemen. I had a little emergency I had to take care of, but I got here.
Oh, it's good. Well, we got Mitch on here, and let's go on, Mitch, and start talking about the importance of what are the things that we as lenders, or that are helping in the lending business, can walk away from this. What are some of the lessons that need to be learned?
Well, the first thing, before we get to, lessons specific to lenders, let me just say this. It's a really important case from an administrative law perspective. And
explain what administrative law. Some people may not understand what they say in administrative law. If you could expand on that.
When we talk about administrative law, we talk about the issue of what an agency such as the CFPB
Okay.
or
Okay.
other agencies, can do and can't do. And what
Right.
they can do sometimes is interpret laws, and they can implement those laws that Congress charged them with implementing and being responsible for and enforcing those particular laws, but they can't make law. They can't
Aha.
make the law
Yes.
themselves. Congress actually makes the law. So the reason I say it's important from an administrative law perspective is a long time ago, there was a case in the Supreme Court, and it was known as Chevron.
Mhm.
And in the Chevron case, the Supreme Court was looking at a statute, and they were asked, when does an agency go too far? Can an agency interpret a statute and issue a regulation based on their interpretation? And how does one judge? And and then the Supreme Court came out with a test, really a two-part test. When a regulation is issued, Congress first looks to, the court first needs to look, okay, to the
Yep.
statutory authority. What law did Congress make? And so under the Chevron analysis, the first step that the court had to take was to look at ECOA and say, okay, the allegation here is that the conduct, the words that were spoken, discouraged prospective borrowers in violation of ECOA. Do our prospective borrowers, are they covered by ECOA?
Interesting.
And
Okay.
they looked at the statute itself, prospective applicants is the word,
Yep.
and they looked at the statute itself, and they said, no, ECOA bans the discrimination against an applicant in a credit transaction. That's a known applicant in a credit transaction. It doesn't ban anything against prospective unknown applicants itself. So what they ultimately decided, just on a one-step analysis, was that when the regulation was issued years ago, it exceeded the statutory authority. And so when the CFPB set out with an enforcement action against Townstone Financial, they were essentially exceeding their statutory authority as well. And it's really important because how many times have we seen the CFPB overreach?
Oh,
How many times have we seen
yes.
regulation through enforcement? How many times do we need to see regulations that go far beyond anything that Congress charged them with?
Ever intended. Yes.
Now, the second part of a Chevron analysis, sometimes it's a little ambiguous. You can't tell whether or not Congress meant to include something or not. When it's ambiguous, when the statute is ambiguous, then under the Chevron analysis given to us by the Supreme Court, then an agency can use their expertise to interpret it and to implement it in the way they deem Congress may have wanted that to be done. But if the statute itself is clear, on its face, in its plain language, a regulatory agency cannot go any further than that in issuing a regulation, in an enforcement action, or anything else along those particular lines. So that's a really, really important decision.
That is really, really important. And the big question that I have is this going to stop CFPB from their overreach? Or, I mean, what's your read on it? I mean, you know the climate there in DC better than anybody.
You know, it's a sad thing to say. It's a sad thing to say. I mean, do I think that well, first of all, the case was decided on a motion to dismiss in a federal district court in Chicago. It's not binding at this very moment in time on any other courts.
Okay.
It's not binding in any other states.
But it's a case precedence, though. Isn't there a certain amount of case precedence on this?
Ultimately, it may prove to provide some precedent within the Seventh Circuit, which is where this case is, but it will probably go up on appeal at the Seventh Circuit, and it will provide precedent if the Seventh Circuit, in fact, rules on it, regardless of which way they rule. You know, if they uphold what the lower court did, then sure, that's absolutely right. But only within that jurisdiction, only within the Seventh Circuit Court of Appeals. Other courts may decide this thing very differently. Do I think this is going to stop the CFPB? No, I don't actually think this is going to stop the CFPB. And I always thought from the very beginning that the CFPB, their intent was to make law, even though that's not what their authority is to do. In some ways, this is very similar to the PHH case, which I litigated. In that particular case, the CFPB went ahead and interpreted RESPA in a way, number one, it was never interpreted like that for 40 years and running, and in a way that was contrary to the statute. So the ruling is very much the same. And that ruling is, listen, Congress makes the law, and we're looking at that particular law, and we're looking at the plain language of that law, and you have exceeded your authority by either changing that or interpreting that in a way that's not in accordance with the plain language of it. It's the same type of precedent. But yet the PHH decision is years old already. It's been a number of years since we got that particular decision. And now we see this with ECOA, with the CFPB. Do I think that the CFPB knew that this was a risk? Absolutely. Do I think that they cared? No, I don't. Do I think we're still going to see more things like this in the future? Yes. But
it does create some encouragement for those that we are seeing now. You led the first case where you defeated CFPB. Now we have a second one, and we start building on this. At some point in time, it's going to set up, I would assume, something where you're going to see enough smackdown through this type of action, although it's not a precedent, as you explained already. It's got to start having some impact. That's
absolutely right. And let me just say one thing about that. Courts like company. The more decisions we get along these particular lines, the more we see courts striking down regulations, striking down enforcement actions as exceeding their statutory language,
key language
their statutory authority, the more other courts are going to be willing to do that as more cases are brought up.
That's encouraging. Mark, any questions you have and you want to jump in at this point?
I have two questions for Mitch. Mitch, the first, and I'll get them both on the table, and if you could help with them. First is, I know there's been a lot of scuttlebutt recently about whether CFPB can even exist, period. Okay. And I'd like to talk about that a minute in the scheme of looking at this. But the other thing I wanted to chat about was that when isn't one of the major problems at CFPB is they really have no official oversight of that organization from anyone?
Well, so both of those questions are really good questions. Let me answer the second question first. Is there oversight of the CFPB? And the answer is, today there is some oversight of the CFPB because you may recall their structure was found to be unlawful. We had a CFPB director that would be appointed for a 5-year term, and they could only be removed by the president for cause. A very difficult removal provision. Now the courts have changed that. The Supreme Court changed that. And now the CFPB director can be removed by the president at will. They serve at the president's discretion. And so there's executive level oversight. They are required to report to Congress at least twice a year, I believe it is, on what they otherwise do. But it stops there. They don't have the same kind of oversight that most other executive branch agencies have. And what they're missing goes to your first question, Mark, and that is, where do they get their funding? They get their funding, they can request up to 12% and get up to 12% of the Federal Reserve Board's budget on an annual basis. It's not coming from Congress. It's coming from the Federal Reserve Board. And that's a separation of powers issue in and of itself right there. because when our founding fathers set up our government, they set up three branches, right? The executive branch, the legislative branch, and the judicial branch. And each has a check and balance against the others, right? And the congressional branch has the power of the purse. They make the appropriations. They gave it away when they put the CFPB together. They gave that away, and as it said, the CFPB merely gets 12% or can request up to 12% of the Federal Reserve Board's budget, and the Federal Reserve Board has to give that to them. That's the challenge that you see right now that goes to the question as to whether or not the CFPB can continue to exist as it stands. The challenge that you have comes out of the Fifth Circuit Court of Appeals, okay, where the court ruled that the funding mechanism for the CFPB is unconstitutional because funding has to come from Congress, and Congress cannot simply give that away. And if it's unconstitutional, then again, the entire structure of the CFPB from day one would in fact be unconstitutional. And that's going to be heard by the Supreme Court. And the Supreme Court is going to make that determination. I believe it's going to be heard by the Supreme Court. And they're going to make that particular determination. And it's a tough, tough determination to make. Not necessarily so tough just on the law itself, but it's a tough determination to be made because the CFPB came into existence in 2010. It's been operational since 2011. It's issued many regulations. It's gone through many enforcement actions. It's issued many civil money penalties. And if in fact the court ultimately agrees with the Fifth Circuit and says that the funding mechanism was illegal, then it did that unconstitutionally. It did that using money, according to the Fifth Circuit Court of Appeals, that it was unconstitutional for that to have.
Wow.
Imagine trying to unwind what's occurred over the last 12 years. So if the Supreme Court agrees to take this case on, it's going to be, they have a tough path in front of them.
Yeah,
On answering the question, and number two, fashioning the right remedy for that question.
Yeah. Well, there's also, I recall, and we had you on years and years ago when the CFPB was all just really getting started, the value of having a podcast for as long as we've had and having guests on for as long as we have. And you went over and talked about how many regulatory bodies were rolled up inside of CFPB.
Oh, yeah.
That is another, I mean, if I recall, it was something like 30 different regulatory bodies were rolled up and packaged and combined. I can't remember what the number was, but it was a significant, and you said undoing this is going to be almost impossible to unravel this ball of tape.
Well, the CFPB was given the authority over 19 federal consumer financial protection statutes that came from a number of different agencies.
Okay.
Came from a number of different agencies.
Oh, it's 19 and not 30. Okay. So
no, 19 laws, 19 laws of jurisdiction that came from many different agencies itself.
Okay.
And the CFPB has issued regulations under those laws. They've had enforcement actions. They've issued civil money penalties. They've put companies out of business. They've done so much with that over the course of the last 12 years. It's almost impossible to unwind what's been done in the past.
Yeah. Yeah. So finding a remedy is going to be the biggest challenge, even if it is in fact ruled to be unconstitutional. That's a good point. Mark, anything else that you had on that? I want to get back to the Townstone Financial and some of the lessons we should be learning from that. But Mark, it's a great question.
One more question, I guess. The civil money penalties that were charged by CFPB over the years, did those where did those go? Were they able to use those funds for their continuous operation, or did they have to deposit those back to where their source of funds for operating came from?
No. The funds that the CFPB has brought into themselves, they're a bureau of the Federal Reserve Board, and that's where that money's going, effectively.
Okay.
That's what's happening
Yeah.
with the CFPB.
Okay.
Again,
Yeah.
let's get back to the Townstone Financial Case. This is significant for what you've already explained, but how should lenders, what do we take away with this is the better way to?
So there are two takeaways. The good takeaway is what I said, and that is that once again we have a court rebuking the CFPB's actions, saying it exceeds their authority. They can't do that because the regulation exceeded the authority and the plain language of the statute itself. So that's a good takeaway. Right. The second takeaway, which is really the reason why I wanted to talk about this particular case here, knowing how many lenders are going to be on, is the takeaway from a fair lending perspective. And my answer to that is there's nothing you should take away from a fair lending perspective, other than maybe the CFPB should not be pursuing redlining. But is it good to get on a radio program and use the kind of language that allegedly was used? No, that's not a good thing to do. That's number one. Number two, the problem the CFPB has and had in this particular case is they brought this claim under ECOA because there are two principal statutes that go to discrimination in financing and housing. One is the Fair Housing Act, and that's a broad statute. You cannot, under the Fair Housing Act, discriminate, okay, in any aspect of a housing transaction, okay? That includes marketing, that includes buying, selling, that includes financing and anything else. And so, could this potentially been a violation under the Fair Housing Act? Potentially. It could have been brought. But when the CFPB was created by Congress, they took the Fair Housing Act and left it where it was. And the agency that has jurisdiction under the Fair Housing Act is the Department of Housing and Urban Development. The CFPB was given jurisdiction under ECOA. That wasn't enough for the CFPB. So the CFPB came up with this theory under ECOA that said, I'm going to go after lenders for redlining because under ECOA, I believe they're discriminating against and discouraging potential applicants. That's why. Okay. Had the case been brought by the Department of Justice, right, with HUD, maybe you'd have a different result. So the lesson for lenders is not, hey, now I can do what I want to do. It's not, hey, I don't have to worry about my marketing practices. It's not, hey, I can avoid marketing in minority areas and minority census tracts. Don't walk away with that particular lesson. That is not the lesson of the Townstone Financial Case. The lesson of the Townstone Financial Case is that the CFPB left with only one of the two principal statutes that go to discrimination, okay, tried to make the one that they were left with work with facts that don't fit into that particular statute. That's the only lesson that you can really walk away from. Very good. Very, very good. Excellent. Clarifying that. Mark, anything on this particular Townstone? Mark, anything?
No, sir, it's been very enlightening. It's very enlightening. And I think it will be for all of us.
Now, Mitch, I want to say thank you so much for reaching out. One of the things we should talk about a little bit about, you've been in the industry for how many years now, Mitch? 42. 42. I'm 50 years in it. So I've got you by just 8, but what you have done in our industry, Mitch, is legendary. The information that your firm publishes, you have a newsletter. So talk about some of the resources that lenders have available through your law firm. And you reach out to me and other podcasts you're on, you're high profile and speak at all these conferences, but what are some of the other resources that people can grab from your law firm? We are full service to this particular industry. You can go to our website, the WBKfirm.com.
You will find our newsletter there. You can subscribe to that particular newsletter. You will find podcasts. You will find speeches that we do, webinars that we otherwise provide. You'll find, treatises on laws that impact you as lenders. And you'll find our newest edition, which I'm very proud of, and it's called the WBK Download, which is short little 15-minute downloads on recent developments.
Wonderful.
Themselves. And you can
When did
find
you start that? That's really recent, is it?
We actually just started that in January.
Excellent. Well, I'm going to be signing up for those as well. Your website has got valuable resources. The news. I mean, I'm a faithful reader of everything that you've been publishing out. I'm somehow missed that, so I'm excited. And the audio is a lot of ways where lenders consume that more quickly, or in when they're out being busy, driving or doing different things. So I think it's a great way to consume additional information. Mitch, thank you so much for your service to our industry, the full services you bring, for all that you have. Thank you for coming on and sharing this with us today. Thank you so much, sir.
Thank you, David. Thank you for your services to this industry, and thank you for inviting me as a guest here today.
You bet. It's been a pleasure. Mark, thanks for joining in. It's always good to have great content. This is some of the best content we've had in a while. I love hearing what's going on and getting the proper perspective, Mark.
Very, very enlightening. And I think people are going to be kind of amazed when they hear some of the things that is said on this, because I think it'd give them a very different perspective than they might work with every day.
Yeah. And I think it was a real good question you asked, Mark, about the refresher about CFPB and the funding and where we are and where the Constitution. It'll be real interesting. We got it. This could be an interesting year. Is it going to, Mitch, is this going to be the issue with going to be decided whether or not the Supreme Court's going to hear the CFPB? It was the Fifth Circuit Court. What was it that they're going to be looking at?
Well, there was a writ of certiorari filed by the CFPB asking the Supreme Court to hear the case.
Right.
Do I think the Supreme Court is going to hear this case? I think it's important enough, but we'll see.
Yeah. If that happens, is it 2023 that's going to happen, in your opinion?
Well, the term is up in June for 2023. And so, yes, there's still time for that to happen. Yes.
Okay, good. Very good. Again, thank you for coming on. Have a great weekend and appreciate you so much, Mitch.
All right. Thank you. Thank you, Mark.
Good to talk to you, Mitch. Thank you, bud. Appreciate it.
Take care.
You've been listening to Lickin' on Lending, a weekly mortgage market update with your host, David Lickin of Transformational Mortgage Solutions. Join us next week, and thanks for listening.